We bought 10% of our assets in Bitcoin. We also had Tesla earnings. I want to discuss both of these events today. This is a Not Even Wrong podcast. It's October 20th, 2021. This is Krim Telco. For the day, the fund is down 40 basis points. The market's up 40 basis points. For the year, we are up 19.2%. The market's up 19.6%. We are underperforming by 40 basis points. Let's start with Bitcoin. We've bought 10% of our assets in the Bitcoin ETF, BITO. It's not the ideal way to buy Bitcoin. We usually like to buy the underlying asset directly, but like I discussed actually a few episodes ago, we were not even able to do that because of the setup, and we thought that we won't even be able to invest in Bitcoin. But now with the launch of the ETF, we believe that the proxy is good enough. So we bought 10% of our assets in Bitcoin. We sold some of our biotech stocks that have underperformed against that. So we've slightly increased our leverage, maybe by 0.5%. So we basically sold shares to buy the Bitcoin. Now, why we bought Bitcoin, we've discussed one or two episodes ago. Let me just recap. I think Bitcoin is a tool for freedom. Money is an information tool for labor allocation. If money is free, unentangled with governments and special interests, then people can freely allocate their knowledge and labor towards the global market and be remunerated for that and exchange money for other services and goods. This is what Bitcoin enables at large scale globally. We've been enjoying a similar type of economic freedom for many years in the Western world with the dollar, the franc, the euro, and things like that. Having a currency that is stable and accepted globally is a very free-making thing. So that's very important. But it is unfortunately going in a direction that we believe is not good, that even in the Western world, we have a sliding nationalization of money through the central banks, both in Europe, Japan, and the US now. So therefore, a new money, the Bitcoin money, is one way that we believe freedom can be further proliferated globally, despite all the headwinds that freedom is facing right now. Just to give a small example of how serious the situation is, even in the United States, the backlash against NHTSA within the political elite in Washington actually has taken a new level now, with appointments at NHTSA by people who are openly not just against Tesla, but even mingle with short sellers and things like that. So the government is going full frontal, trying to use its bureaucratic muscle to stop a company which is disrupting the car industry, and that doesn't please the unions, which are probably the most important backers of the current establishment in Washington under Biden. So this is just one example of how serious I think freedom, the risk of losing our freedom in the United States is. I'm not saying we're at the cusp of losing it, but I think that we're kind of creeping towards a situation where freedom is getting clipped everywhere. And therefore, Bitcoin is, to paraphrase Milton Friedman, it's not just a good investment or some sort of ethical investment. It's a moral imperative at this point to proliferate this asset and make it a global asset that can proliferate freedom everywhere in the world. Again, we haven't bought directly Bitcoin, and that has some small technical reasons that I don't want to go into right now. We bought the ETF. This is not investment advice. Please do your own work. The purpose of this podcast is to give people a sense of what it feels like to run a hedge fund and not to give investment ideas. But in the context of that, we also share our ideas and we also share our investments, so people can also check against that and see how our ideas translate into returns over time. Just to finish the Bitcoin conversation, I think I personally have been, let's say, enchanted by the history of money for decades now. I've studied the history of paper money, which started with the Bank of England. I've traveled as a young student to places like Lombard Street in London, Exchange Place in Hong Kong, Wall Street, these big Amsterdam, the first stock market, all these big places where freedom, trading, money, securities, all these things were proliferated and happened and developed and invented. And I've never really understood why I was so fascinated by these things. And I think today I understand why. It's not because I'm so enchanted with money or something like that. I'm enchanted with freedom. The measure of wealth is freedom, and wealth generation through the proliferation of global trade and freedom and money is proliferating freedom. That's what excited me about these things, and I think that's why I'm also so excited about investing now in Bitcoin as part of running Orange Capital Partners. So the second topic I want to discuss today is Tesla. Tesla just announced their earnings. I want to discuss our impressions. First and foremost, the automotive gross margin is a stellar 28.8%, is higher than we expected. And it just shows how powerful this business is. I think on the positive, I want to say that the execution of Tesla is just getting better and better, which was one of the biggest risks. So the biggest risk is getting better and better, meaning less risky. And that also explains why the stock is doing so well. I think I want to talk more about the headwinds here because the numbers speak for themselves. And I think this company is executing, the demand is strong, the cars are amazing, the software business is growing, everything is fine. I think the headwinds are absolutely, I would say, the political front, particularly in the US. We have to be very serious about this, particularly this new NHTSA situation could become a problem, could become a headache. They will fight it. I'm sure the lawyers on both sides are now strategizing of how to play this game. But what I expect is NHTSA to be much more aggressive. Particularly this lady from Duke. She probably is even short Tesla, or at least she has some sort of stake. And my hunch is she's being financed by the car industry in order to at least try to prevent a further rapid increase of full self-driving, because this is driving the Tesla demand, and the Detroiters can't compete with that. So having said that, let's talk about other headwinds. The typical stuff, the supply shortage and all these things are serious problems. I don't want to diminish them. And even though Tesla has been working very well through them, given that they want to grow 50% annually, I think there is certainly a lot of risk. And I think Zach Kirkhorn said it on the call. He was not, let's say, giving guidance that they will continue growing at this pace or even growing at 50% from now on. They still keep their guidance of average of 50%, which means we could have a decelerating growth in the next coming years, because this year we have a more like 80% growth. So this is, of course, it's not a negative in a sense that you should be concerned. I'm just saying these are certain headwinds that also prevent the stock from going further up in the near term. I think another headwind is the uncertainty around Cybertruck, the uncertainty around 4680. Drew Balino, Senior Vice President of basically pretty much the COO, I think, of Tesla at this point, said that we are on track, all the expectations are met. But those are, of course, jargony words for we're not ready yet to announce a breakthrough, or we're not ready yet to announce that the rubber is hitting the road. That's fine. Again, that's not a reason to be concerned. I'm just saying that people might have wanted to hear more positive news on 4680, because 4680 is the new cell architecture which will propel Tesla, which won't just give it the ability to grow much faster, but also the ability to drive costs further down, therefore get volumes higher, and also fight off disruptive competition, in particular China. So those, I would say, are the main factors from the call. I would say the call was interesting also because for the first time Elon Musk was not on the call. I think the call went well. It was very matter of factual, as expected. The facts were given. The comments were concise, clear, particularly Zach's comments, but also the other, Drew and some other people spoke pretty clear about it. And I think what they leave open, they leave open. What they're clear about, they're clear about. I think Tesla is becoming a very transparent company because they have something to sell. They have a technology which works. And those are the kinds of situations when you can be transparent. can please all stakeholders. This is not a zero-sum game or anything like that, because Tesla is doing what we call disruption by lowering the cost of iteration and increasing delivery of products and services that are disrupting existing industries. Rubalino, for example, talked about the iteration in terms of the 4680 and how they're able to iterate much faster. Zach Kirkon spoke about the iteration on the insurance business, how they're iterating around the models to pricing insurance. So all those things are very much in line with our thesis. We believe that the main reason Tesla is so successful is because they're able to lower the cost of iteration, and therefore through trial and error keep solving problems much faster and also having a lot more impact on their markets. Thank you.